Hello everybody and welcome to the 3 ways to attack a consolidation. My name is Darren Hancock and I'm the host of the Breakfast Club on YouTube at the ThetaWaveTrader, YouTube on youtube.com. And I'm going to share with you guys today 3 ways to attack a consolidation. Now, I'm going to note up here, none of what you're about to read or hear should be interpreted as financial advice and is intended as educational material only. The views expressed here are based on personal market analysis and concepts taught by ICT, the Inner Circle Trader. There are many layers to teachings here and should be researched thoroughly before attempting to implement them. You should always trade at your own risk. Now, we're going to look at consolidations, and this is a 1-minute chart, so hopefully this will kind of waylay all those people that look for cherry-picked kind of situations. Look for a basic consolidation is any little range that we're stuck in for a while. Now, they will have many different morphologies or how they are shaped. How you draw and where you draw your consolidations can be a level of interpretation, but I'm just going to give you a rough idea of what I look at as a consolidation and when you can trade from it and to it, and some ideas or some objectives you can reach for when you're looking at these consolidations. So I've highlighted here basic consolidations that I can see, and then I'm going to show you the 3 different ways to enter into it. And then what we'll do is we'll kind of move along here and we'll kind of pick a consolidation and we'll draw it out and see what we get as time moves on, just so you don't feel like it's a cherry-picked type scenario. So a consolidation here, you see this consolidation forming here. The first way is to return to the consolidation high. So here's an example of, we'll call it R1, R2, and or C1, C2, C3 if you want. Consolidation 1, consolidation 2, consolidation 3. So this is the first one. So we have a consolidation here. When we break above the consolidation high and we return back to it right here, that's an entry point for a long. Now, your objective would be these old highs back here. Now, this is a 1-minute chart, so you're not going to get a lot of handles on this. But if you're a quick scalper and you're looking for a quick run, that right there is 44 to 48, so it's a 5-handle run just in a few minutes there. Okay, so we have consolidation. In here, we have a run above the consolidation. We come back to it right here. We could also do, so I'll show you several different interpretations of this. So you can go from this original consolidation here. Let's go to the high here. And we return to the overall consolidation. Now, if you take from here to here, let's move it right up to the top. Let's say you said, no, Darren, I think that's my consolidation right there. Here's where return to consolidation's equilibrium comes into play. So you can see a return to the high or the equilibrium, and then I'll show you the third one specifically and how that works. So this first one is consolidation, return to it here, run above the old high. We have a new consolidation forming here. We run above it, return to it, in or around the 50% or equilibrium of this range from high to low. Equilibrium is this dotted line here. We're inside of the fair value gap, so that would be the ideal place to look for an entry. So when you're looking at consolidation, there's a premium and a discount. So when you look at a range, so this swing point you see here and this swing point you see up there creates a range, a small range, and we got to look for, you split that in half and you'll see a premium array and a discount. So anything above 50% is considered premium. Anything below 50% is considered a discount. Now, when you've just broken a old high here or a consolidation, and we start to run back down, so you're running into the high or the 50% of this consolidation here, you want to look for a PD array that is in the discount rays that support price. So if this right here. Now let me just blow this up so you can see a little clearer here. If I take the range from here to there, and we look at a discount array. So there's your 50% right there. So premium, discount. Price always has to move from a premium to a discount to gather up orders to go long. So here's your discount array in 62%. There's also a little fair value gap sitting right in here. Price runs right back into it, tags it, and then we run for the old highs again. So again, I don't want this to seem like it's cherry picked, so we will continue to show you these over and over again. So that's your return to the old high or 50% of the range. We haven't quite hit 50% of the range yet. We have taken the high, so you can't just say now as soon as it comes back to 50%, I'm going to take that run up again. Keep in mind you've already hit the high and you've hit we've hit a discount array in here already. You've run the highs, wait for your next setup. We run the low, come back up, we create a new consolidation in here. Now here's the next example. We run down, we come back up, we tag the consolidation. So there's rule number one, return to the consolidation high, or in this case the low. Make sure I put in there so you guys can see that that's a low as well. So you get the high or the low. So here's the return to consolidation right here. You hit it, and then we're aiming for this low here and this low here as your quick objectives. So you've got that one there. Then you'd be aiming for equal lows down here. And again, this is hindsight. You can do this into the future. You can test this, back test this as much as you want. You'll find this is consistent in any time frame, any chart, any asset class. If you don't believe me, go check it. You'll see. So then we return back all the way deep inside this consolidation again to the 50% of the range, and then we snap away from it. So here's an example of, we have a consolidation. So here's your consolidation to here, from basically from that low to this high here. 50% of that range is here. We run up above old highs, then we blast all the way through it. Then we come right back up into 50% of the range again, right here. Always look at the bodies of the candles. The wicks can do some damage, but again, look for what's the range. Pull your fib tool from high to low, because you're down here now. Look at 50%, see? 50% of the range that we talked about also coincides with 50% of the consolidation inside here. They tend to overlap, okay? So we have another consolidation forming here. What do? We dip right back down and right into the 50% of that range, and then we start taking out these old highs again, running back up into the premium range that we're seeing right here, all the way back up into fair value gap, a gap in price, rejection block, and if we pull this one all the way over here, you'll see we hit that consolidation once again right off the bottom. We trace away, so we have smart money reversal, low risk sell, accumulation, back to fair value gap, distribution, accumulation, second level of distribution, and we have a unicorn. Run below these old lows, big, quick exit through. Okay, we have a new consolidation. I made a bigger consolidation for you here, so again, you can split this up all you want. As soon as we have a break above the consolidation into a premium array from this swing point to that swing point, we break down away, come back up inside the consolidation and break away. Here's another one. So let's just take this one from here to here. So we have a consolidation. We run up, we come back to it, come back up into, we're overlapping consolidations here. So as price breaks through it, watch how we trade back up into it. Consolidation's finished, we run down, come back up into it here. We have another consolidation forming here. So look, there's 50% right there. We have another consolidation from here to there. If you pull it to the low, 50% right on the money here. The wicks do a little damage. Your stop loss will be down here. And we're running for old high or premium array that supports a price that you're looking for. So if you're looking for a quick run to a PD array that's premium, discount, split that in half, look for a premium. Okay, so that's the first two. This one I wanted to show you was this consolidation here. So if you go from bottom here, we've had price run up to what would be the bottom here, the midpoint. And then the third one is this one right here. So now there's three layers. Now how you have to determine your stop loss is based on the previous high. So you have to put, or the previous low. If you're going long, you'd have to put it down at the previous low. So calculate the difference between the top and the bottom of that consolidation at 1% or 2% of your account, whatever you're willing to trade. Stop loss would sit down here. Calculate the leverage that you need to get 1 or 2% maximum per trade. And what you trade is entirely up to you. Usually it's the 1 to 2% rule. Stop loss will be down here, 50%. If you decide I'm going to come back into 50% of the consolidation, or 25%, or the high of the consolidation, that's perfectly fine too. And you take that and say, well, obviously I get a little bit more leverage the closer I am to my stop loss. If you go to 50% of the consolidation, you get maximum amount of leverage that you could get out of a 1% of your trade, because it's smaller distance between your entry and your stop loss. And then you're looking for first scale out, and then look for PD arrays that provide second level scale outs. And I can give another video later on how to, where specifically you can scale out in these fair value gaps. But the one I wanted to show you was this. So we have a consolidation. Let's say we take this whole range here. This is a consolidation. The leg that takes out the consolidation and we run below it, when we come back into 50% of this leg. So here's another way you can run this. So this is the third way you can attack a consolidation. And it's the leg that takes out the consolidation. When we get a trade back into or around 50% of this leg that takes out the consolidations, high or low, in this case it's back up into here, then we take that in the opposite direction. If we have a body close above the 50%, and I'll show you multiple examples of this, if we get a body that closes above that is not inside a PD array, then chances are we're going to continue on to the downside. So that's what this says. Look for a leg that takes out the high or the low of the consolidation, and then take your fib tool and pull it from the high to the low of the leg. When price trades back into it, as in, so that's the leg, we trade below the consolidation now, and we start to come back into it. So you take out the 1, 2, 3. Stop loss, it has to go up here. Look for, so there's two different things. One's going to be a straight consolidation with no leg, like you saw over here, over here, over here, and one with a leg. One with a leg, the stop loss has to go above the high of the leg, so you really have to have minimal leverage when you start looking at your stop loss way up here. On a 1 minute chart, it's not so bad. If that was a daily chart, that would be crazy to enter that. You'd have to wait for a big run up here. Everything that I show you here on the 1 minute chart is available on any single chart, asset class. Trust me, you'll see it. Don't trust me. Go back and look on the charts yourself. Back test everything that I've told you here. So when price trades back to 50% or thereabouts, then this is the last entry. If price closes below or above that level, there's a high probability that price, if it doesn't close above that high, that 50%, if it does not close above that, or it just tags it and then pulls away, wait for the body, by the way, not the wick. You can get wicks go through this, but the body tends to hold beautifully on it. And then you're aiming for the opposite direction, so down here. So when it's retracing back up here, people are wanting to buy this, but this is the short right here. This is where people get suckered in because it just ends up running. They think it's going to keep running up for these equal highs when it's just had a consolidation. Look for that leg there, 50% of that leg max. If we do close above that 50%, then chances are we are going to go for those highs. But if it doesn't, if you see that body close above that, or right at it or below it, and you see the next candle close down, pop in here, go for a short, or wait for a fair value gap to enter into to go short. All right, so let's just continue building this so you guys get an idea of how this works. So we've got this first one back to here. Okay, we have, let's take this guy right here. Consolidation high to the low here. Look where it lands. 50% is that high to that low. 50% of the consolidation. We trade back to it. So we ran up above it, come back to it. You get long on it. Stop losses down here. You get long on it. Let's just keep moving across here so you get to see what consolidations. That I'm not form-fitting this stuff. This is all just magical. Magical. So consolidation, all inside this range here. We trade up, we come back to it. So here's one entry. We come back to the consolidation. We trade above. Well, I guess in this case, you didn't get the high. So you would have been close and it would have come back to you. And you say, well, my stop loss is down here. I've got very low leverage up there. There's your 50%. So if you decide to take two entries, I like to layer mine and go 1, 2, and if there's a leg there, I'll go to the third one. And then if I get taken out, I get taken out. I wait for the next. This happens so frequently, and I'm showing you on a 1-minute chart how often it happens. You go to a 30-second chart, it happens even more often. So again, your consolidation, you break above, come back down 50% of the range, and we start to run for higher highs. In here, up here, look up here for this imbalance, this fair value gap. If you're holding it long inside and you're in a bigger range here, so if you go from that high here to this low is the immediate range you're in. So you say, I'm at 50% entry, so I'm in a discount array. What PD array am I aiming for that's in the premium portion of this larger range I'm in? I've just come back into discount, and now I'm reaching for higher highs. Well, where's a place to reach for? This section here, little fair value gap. It's a sell side imbalance, buy side inefficiency, or SIBI. There's an imbalance here, and there's also these old highs. So if that's your aim, right there, you get your high. Okay? So let's just keep going. I don't want you to think that I'm just picking some little random place in a chart so that I'm form-fitting this, or I'm gonna. This happens all the freaking time, my friends, all the time. Okay, I'm gonna take a random chance here, and I'm gonna say that's a consolidation right from here. So we're consolidating in this range. We break up above it, we come back into it. You got a high. You don't even reach down into the midpoint here, right? You get the high, dips down a little bit more. Your stop loss is down here. You run up old highs. Again, old high back here. Now you wait. Here's a new consolidation. It's a small little sucker right here. We get no return to that one. This has got some intention. That's leaving town. So here's a really interesting example. This starts to get more advanced stuff here now. Here's your consolidation, right there. We break down below it. We come back inside it here. We aim for low, and now we're looking for a discount array. So don't forget, now you got to pull your fib tool from the low. This is what the algorithm does. It seeks liquidity above and below the market in premium and discount arrays over and over again. You don't need indicators. You don't need Bollinger Bands and MACD convergences, and no matter what's going on in the boardroom, fundamentals will not give you this level of precision. And again, don't take my word for it. Go practice it. Go see it. So here's your consolidation. We run down, we come back into it, and we're aiming for a discount array. Remember, range, consolidation, trade back into it. Now aim for a discount. We haven't hit it yet. Aim for your discount array, 50% right there. What lines up right here? It's an imbalance and a fair value gap that sits right on a 50% of that range. So you aim for that. You're going for it. Where you run back up, you get another opportunity to go short. Back 50%, hit it again. Take out the low. Aim for that low if you want. Back to the order block. Multiple times you could got extra trades off of this one. Let's carry on. Let's keep going. I don't want to make this video too long, so I don't want you to think that I'm just belaboring a point here. Let's do it. Let's call this little chunk here consolidation. Now here's how you got to be really nimble. So watch. Body. See how this body trades above that high, outside of the consolidation. Then this candle comes back, tags it, and then we leave. You're out of here. That's the only opportunity you get to get in on this consolidation. Not form fitting. Double check it. You'll see I'm not kidding. That's a great one. Or you can just say, let's pull it all the way over here if you want. Again, where you pull your consolidation from is entirely up to you. So we have another body then. If we decide that's going to be our consolidation, then you say, okay, when body breaks above, it does come back, hits it one more time. That's the opportunity to go long. Okay. So have a look at these things on your charts over and over and over again. Again, right here. Here's a consolidation. From that low to that low. There's a consolidation right here. So we break down below it, come back up inside it, or if you want to just say, I want this to be the consolidation. I'm going to do it with a shorter one because I don't want to look like I'm form fitting it. So we'll say this is a consolidation. We don't break the high, we do break the low. We come back inside it right here, tap the bottom end of the consolidation, and break away. If you wanted to pull your consolidation from there to there and say that's the whole range I want to play in, then fine. You're still inside the bottom of your consolidation right here, going short. Anyway, I hope that helps. I hope you get an idea of what we're looking at for when I'm looking for consolidations, what it is specifically I'm after, and a little bit about how you trade multiple ways to get a consolidation. I want to have a look one more time for this number 3 here, so you get an idea of what I mean by number 3. If we get a consolidation with a leg that takes out, let's just rip back here to a random place and see if I can see a consolidation. A really good example for you guys to see a level 3 consolidation. Otherwise, you're just looking at 1 and 2. Mostly, you'll see 1s and 2s. So consolidation, this whole area is a consolidation. See this leg that takes out the low? That whole consolidation there, leg takes the low, also takes out these old lows down here. We have a sudden burst back through, so look for 50% of that leg. So high of the consolidation, 50% of the consolidation, and the leg that takes out that consolidation, you can take 50% of that as well. So in this case, you'll get, again, a return to 50%. Like right on the money here again, 50%, boom. After running all the way up there, you come all the way back. Don't forget when you come back to original consolidation, if it takes that, you go in long. So you got multiple different places there. I'm trying to find a really good example that supports this consolidation, 50%. I think this might be a good one here. You get an idea of what I'm talking about. consolidation, leg that takes out the consolidation. We trade back up and through it, back into 50% of it, and then go long. But we said if it closes below it, then we don't take it. But we're in a discount array right from here to here. This is where it's open to interpretation. We're into a discount array, a logical place for a discount array to hit. Order block, little or inversion fair value gap right here, right on the money. This is where I would give my rule a little bit of a little leeway, just because there's a discount inside that range that we're looking for. A discount array you get support at. I'd have my stop loss not down here, but in here somewhere. Again, looks like I'm form fitting it, but you'll see if you try this stuff out. I will try to find another example for a price leg that takes out a consolidation. Consolidation, price leg takes out the consolidation, runs back up. We don't get back into 50% of the leg though. We just get back into the consolidation high again, and then we leave. So rule 1 works fine there. Consolidation, break above, come back, look at that, dink, touch the top of it, and then go. I'm not randomly picking and choosing here. I'm just giving you a consolidation that that appears over and over and over again. Just where you put your stop loss is very important. It's got to be on the high, risking 1 to maximum 2% of your account. Okay, consolidation, leg that takes out the consolidation. So here's an example. You go from this high here to that low. Let's say we got a big chunk of consolidation here. Right there, see that? So we take out the low, we run the low. Now I'm going to show you the leg. Here's the leg that takes out the high, right there to there. Now when I draw across, oops, right there. So there's the leg, there's your consolidation. There's the leg that takes out the high. We run all the way down through it, and then we come back into it, and there's your 50%. We don't take the highs, wick, multiple times around that 50%. There's also a little premium array in there. Give yourself a little bit of room. The bodies are respecting this inversion or this fair value gap right here. Wick up, you would have been like squeeze, and then all of a sudden slam-o down below your lows. So there's the number 3 rule. So anyway, you go back through your charts just like I did here, and you'll see this isn't form fitted. I just went through a random bunch of minutes on the chart, so you can go back, have a look, try it out, tell me what you think, and leave your comments in the section below. And I am happy to help out any way I can. I'm the ThetaWaveTrader, Darren Hancock, host of the Breakfast Club. Hope this has helped you guys, and if you want some more clarity, by all means drop me a note or pop on by the show in the morning, and you'll see us looking for this stuff every single morning. But until then, thank you so much for tuning in, and have an awesome day.